The next session that we're going to be talking a little bit about is a panel discussion, but before we get into it too deep, pardon the pun, we're going to talk a little bit about small-scale mining. So if I could get the presentation up, that would be fantastic. And just to provide a little bit of context for the panel discussion that we're going to have. So in earlier this year, early 2024, we received a report that we had commissioned from a company called Common Good Mining. And it spoke to the opportunity that small-scale mining represents here in Canada, specifically around lithium, nickel, and cobalt. And as Andy already spoke to earlier today, and as Teresa kind of mentioned in her conversation, in her presentation, we do think that this is going to be a growing trend in Canada that we could certainly capitalize on, and that you in the room here that are developing solutions should take a good long look at as a potential opportunity for you as you grow and scale your businesses. So the report is titled The Economic and Social Impact of Small-Scale Mining in Canada. You can find it on our website. If you have trouble finding it, let us know. Happy to send a copy of it to you. It is about 56 pages in length, so it's a good read, and it's quite comprehensive about what that opportunity looks like here in Canada. This is going to just provide a little bit of an overview of what those findings were, and a bit of a disclaimer as to how this information was collated and put together and what it's meant to be used for. So we know that in order to transition to a greener economy that is battery-based, we are going to need more critical minerals. The trouble with critical minerals right now and getting those minerals out of the ground is that it takes a long time to get a new mine up and running, about an industry average of about 17 years. And all the while while we wait for those mines to come online, production on the existing mines is actually falling. All right. So that's leaving a bit of a gap in terms of what we're going to actually be able to put into battery electric vehicles or the batteries that are going to power our economy. So what can be done? One of the solutions that we're looking at, again, is small-scale mining to bridge that gap. So it's for deposits of any size. It's often an overlooked opportunity of supply, source and supply. Oh, there we go. And it can also be used in larger deposits as well, where maybe they're on the periphery or on other sites, as Teresa alluded to in her presentation. But this is how it addresses some of those issues that large-scale mining has trouble with. So for investors, large-scale mines require significant ESG. For small-scale mines, some of those ESG requirements are reduced. And if you are able to get to production faster, it can actually establish credibility and a track record of getting that production in terms of also being able to produce the minerals at a lower cost point. Regulatory approval environment is very different for small-scale mining. Local communities, when you think about large-scale mines, are often worried about what the impact of that community is going to look like. With a small-scale mine, it's much easier to get that license to operate and to get community buy-in. And the cycle that we find ourselves in junior mining, where you're looking to raise money constantly, is actually kind of reversed because you're able to get to production faster, making it the economics of these mines more attractive, de-risking that investment. So what does this look like for in Canada? Well, this is what the study looked at. It looked at over 200 projects across Canada, assembly of deposit information from a database, qualitative assessments, calculation of the potential economic impact, the exploration of potential social impacts and barriers, and recommendations that they could see based on the information that they were able to find. And these are the key takeaways. So many deposits evaluated warrant further evaluation for small-scale mining. So with some of the technologies that we have seen today, they could become significantly more economically viable to mine. Developing just a portion of these could unlock trillions of dollars in potential economic impact. particularly when you think about the quantities for some of these critical minerals, really aren't needed in huge quantities. They could be much smaller and still be able to meet the needs that we need for batteries and other, for microchips and all those other kinds of things. And there's significant opportunity for a positive social impact. So because they're smaller to operate, it's easier to train a local workforce. And there are also co-ownership models that could come into play where the community actually owns a stake in the operation, again, making it easier to get that license to operate. And for the MICA members, the technologies that we're working at and looking to develop in this network and that we have supported through funded projects are certainly there to enable a lot of this small-scale mining to happen. So this is the abundance of projects that were evaluated. So a good chunk of them there in Ontario and Quebec, which I think should come as no surprise. And this is a map of Canada looking at where these deposits are located. So you can see they're all over Canada, and they represent a significant economic opportunity for many of the provinces here. And they're also, a good chunk of them are already located in mining jurisdictions that have infrastructure in place. So you could use a lot of these small-scale mining as feedstock for already pre-existing infrastructure and mills. Potential economics and social impacts. So again, unlocking significant economic value to the tune of, potentially $6.2 billion. Long term, that could be even more. This would unlock, minerals that we need for the current economy right now and well into the future. And would also allow these small-scale mines potentially to scale up much faster and actually become those large-scale mines while being in production without having to wait to raise billions and billions of dollars to make a brand new big giant mine. And then so there were a number of technologies that were participated in this. Novamero was one. ALS Goldspot also took part. So did Rockburst, Lithologic, and Bort Longyear, among a handful of others. Were very gracious and provided their time and expertise to talk to our team about what small-scale mining might mean for their technologies. And these are some recommendations and next steps. So again, if you'd like to read the full report, it is available on the MICA website. I highly encourage you guys to do so, even just if you're going to skim through it, because we do believe that this is a model that and a new framework that could really unlock a lot of the critical mineral potential that we have here in Canada and create a new paradigm for mining, and while also giving a lot of these new and emerging solutions the opportunity to pilot and test and scale their technologies alongside small-scale mining operations. So thank you for that. And with that, we're going to have a little bit of a panel discussion on what this opportunity of small-scale mining looks like. So I'd like to invite back to the stage Teresa Quick from Novamera, Andy Reynolds from Inspire Resources, and Douglas Morrison, our CEO from SEMI, who has been thinking about this model for a very long time. All right, so first question, to the panel, we can jump right in, but what excites you about small-scale mining?
Free-for-all?
Yeah, free-for-all.
I think one of the biggest things is speed. One thing that we keep talking about over and over again is we need more types of all metals. The reality is it's not just critical minerals. There's all sorts of minerals, as we talked earlier today, that we're finding are actually pretty critical when it comes to new technologies that are coming out. And right now what we know for sure is that large-scale mining takes a very long time. It takes a lot of capital, and it's getting harder and harder for us to build these, mega projects. And they're getting harder to find, right? Like we're having a harder and harder time finding these really large deposits. And so we're a little bit stuck, and I kind of use the reference of stuck between a rock and a hard place all the time, because the mining industry is under immense pressure to be able to deliver. And yet there's so many obstacles in the way to be able to do that at a pace that the world needs. And so I think where technology comes in is we are also advancing technology in a way that allows us the opportunity to do things a whole lot faster and a whole lot more efficiently and find solutions that address the things that are holding mining from being able to produce what we need to produce. So environmental challenges with communities, cost, all those things are now, we're finding solutions to those where we can start to now apply those. And small scale mining, I think it's not just, we talk about it as being, a volume piece. Well, small scale, it's not going to make an impact. But what if you aren't just talking about the volume? What if you're targeting ore that's ore and not waste? The volume becomes a different question now. It's not just small scale mining. You're actually extracting more value out of the ground with a lot less effort, and a lot less cost, and a lot less waste.
So for me, the value here is disruption. We have an industry that has a very fixed mindset about what scale means and why you pursue it. And it has shaped the industry and its architecture and its commercial relationships very, very firmly. And when an idea like small-scale mining comes along with the technologies that can unlock it, and with the digital capabilities to simulate it and calculate its value, it just blows that kind of thinking up in the air and forces us to reconsider it. So a lot of things that a lot of people take for granted, that you'll hear all the time, are challenged by this whole idea. And that in itself is valuable. That act of disruption is what makes for a vital industry that has license and is recognized as moving things and trying to solve problems. And that ultimately will bring a lot more social license to the entire mining business, even if it never displaces the vast operations in the Pilbara or wherever. Even if it never displaces that there is a place for this kind of thinking simply to dislodge us from our positions of comfort. And that we have to recognize, even though it generates discomfort, that's valuable. It's very valuable.
Yeah, I think the other factor is that it's simply not possible for the industry to produce the metals that are required in the time that we have. People tend to think, mostly within the industry, we think about cost. We don't think about time. Time, in terms of time value of money, has a much, much bigger impact on the net present value of any project than does slightly changing your operating cost from one thing to the next. If you can even get into production 1 year sooner because you've got social license faster than you otherwise would have done because you changed your approach or changed your practices, that has a huge impact on your net present value. And when you consider that roughly at least 5 years, if not 10 years of the delay in getting into production is community consultation and negotiation with communities, and community license to operate is not permanent. We've seen in the last 5 years, or 3 years even, companies losing license to operate, and the whole process goes into complete abeyance. Panama is one good example. There's a couple of examples in Peru. And they're not going to stop. They're actually going to become more frequent. The whole idea of the small-scale approach is going to challenge the entire industry. It's unreasonable to expect that the elephant-sized part of the industry is going to disappear. It's not. This is in addition to the current model. But I think you have to expect that the operators of the current elephant model are not going to welcome this development.
I like calling it the elephant model. That's great. But so speaking of the elephant model, that's the incumbent that we're used to. What does the small scale mining model look like? What is the business case for it? How does that get disrupted? What is the change there?
Well, I think the junior mining market, anyone that's kind of heard what's happening, it's getting harder and harder and harder to raise capital to be able to further a lot of these projects. So that's like one huge sort of challenge that small scale mining could potentially solve, which is it now provides an alternative route than just drilling and drilling and drilling, right? So you could now potentially define a smaller area and actually start production and start generating your own revenue to be able to fund the rest of that project. So you're kind of changing the game in terms of what the options are for some of these potential junior miners. So I think that's one. I think for us, that piece, you need to have a very tangible turnkey solution. And that's one thing that Novamera has been really focused on is how do we actually, we can pontificate and we can talk about all these things, but what's the actual economic value and thing that you can put in front of people that go, here is how you do small scale mining. Here's how it works. Here are the costs. Here's the process, and create that ecosystem around getting some of these smaller scale deposits into production. And to Andy's point, there's so many parts of the mining system that have been set up for large scale mining that there's going to be challenges and things need to start to fall into place with a new mining method that's coming in. And I mean, one of them is just investors, right? Like investors are used to deploying large amounts of capital. So how do we go to the investors going, listen, instead of investing in one mega project for 50 million, why not invest in 10 smaller projects? You can diversify your risk, you can get your return a lot faster, and again, create these new pathways that are very clear and very obvious for projects that might be stuck in this constant loop of drilling, press releasing, forever and ever until they get stuck in a place that they can't move forward with it at all anymore. So I think we need to create very clear pathways, very clear ecosystems to be able to enable asset owners to be able to move forward with deposits.
I think you've really hit the nail on the head there, that the relationship with investors is a key opportunity here. I'm not sure that everybody realizes how much the junior and senior mining businesses have diverged. But the investor base for junior mining now is tiny. It's tiny and very specialized. And if you go to the Vancouver Resource Investment Conference and hang around those people, you'll realize it's not a very representative sample of the population. But if you look at the statistics for junior mining equity issued in Canada last year, it's astonishing. 75% of it was immediately donated to charity. What does that tell you about value generation in that sector? Something is seriously wrong in the junior mining sector. And the seniors have evacuated that, and they're treating it like big pharma, and they can just buy it. It has become stranded. The junior mining sector has been left to its own devices, has become stranded. It's in real trouble. And it needs fast to innovate the investment product that it's offering in order to access new investors. And what I've noticed is that around mining investors, there is a moat that other investors will not cross. They will not, like if you're an impact investor, no, you ain't gonna go and join those guys at the VRIC. If you're a senior mining investor, you've vacated that space too. If you're a senior mining company, you're doing very, very little, just standing on the sidelines waiting to pick off the vulnerable targets. So the junior sector has been stranded, and it desperately needs to offer a new investment product. Small-scale mining offers that new investment product, but the value is in the optionality. So there's a huge amount of optionality there, and you can find out very quickly whether something is going to grow or not, and if it isn't, you can walk away with very little loss. That is what junior mining investors, the biggest difference between junior mining investors and everybody else is that junior mining investors will tolerate people just selling a story and not walking away from a bad project. All the other investors, venture investors, will require you to walk away from a bad idea. We need to get some of that thinking into junior mining in order to make it go faster and improve the resource allocation. And small-scale mining, I think, is the best avenue to bring some of that new thinking and build bridges to different investor communities that can start to resolve the raw materials crisis that we're going to face.
Yep, so the other aspect that we can talk about how the junior market is an isolated pocket, but actually so is the senior market. They're just as isolated. There is no spectrum to go from the junior market to become a major. It's a very, very difficult path to follow. That wasn't the case 30 years ago. There was a vibrant, small junior market, and there was a clear pathway all the way. If you now look at some of the battles you've read in the mining press, about major companies trying to buy other major companies, it's because there are no other companies that the biggest companies is worth buying. The rest are just a snack. It's like dinosaurs, Tyrannosaurus rexes, struggling with one another. All the other dinosaurs are just a snack. It's not going to get them through the week. So those are not targets for acquisition by those senior companies now. The only viable targets for them are other senior companies. Like we've got two massive gold companies, and almost everybody else is irrelevant in terms of scale. So what do those two Tyrannosaurus rex do next? Because there's no other alternative, and that's true for many of the other big guys. So that model has itself come to is approaching its end point where there's nowhere else to go, and there has to be something new, different that comes on the scene, and I don't see anything else coming on the scene.
So if I'm hearing it, so small scale mining, is it a replacement for this junior mining? Is it a step change in the how we think about junior mining? Is it a rebrand of junior mining in some way? What needs to change in terms of how we think about mining operations then at that scale?
I think that you're just now offering a new solution to get out of this constant loop that's happening, right? Yeah. Like there needs to be an alternative. Like right now, it's just this constant loop of drilling, press release, and hoping that you hit big with these big deposits. And like, how long do you have until that deposit isn't as big, or it takes too much money to be able to show that it's big? And so, what can we offer using new technologies and new methods to be able to move that project into actual production? And so, I mean, again, for us, one of the things is, you need to make it accessible. And so Novamera's solution uses very low capital. We're using conventional drilling equipment. We're just adding technology to make it a very effective way of extraction. And we're also simplifying it, right? So when you talk about how much is required to build these mega mines, you're also just creating a very simplified idea of mining using conventional drilling equipment. And so a lot of juniors as well don't necessarily have operational experience, so we need to create solutions that are actually tangible, that they can understand and start to move, because the reality is we need all these different sources of minerals and metals, and we need to find them in as many places as we can. So I think small-scale mining has the benefit for mid-tiers and large caps as well to be able to create a hub and spoke. So, instead of just focusing on exploration projects, you can start to look at, smaller deposits that are within trucking distance to your mill, and look at putting those into production instead of, looking for other targets that might be the big next pieces there. Or again, periphery deposits, right? So a lot of these deposits that are just walked over, they're known, they're there. How do we add production that's more, that's very low risk as well, right? So one amazing thing about small-scale mining is often, at least with Novamera's process, it's off to the side. So it's not actually impacting your operations. You're actually able to start to generate production off to the side. And I think, quite frankly, one of the hardest parts about technology adoption within mining is that it's such a large machine that it becomes a very challenging thing to adopt new technologies, because you have to change so many pieces. There's so many stakeholders involved. There's so many things that need to happen. And so what small-scale mining ultimately does is it provides that next option to be able to implement change that doesn't necessarily impact what you're currently doing with those elephants. Because the reality is, I don't think small-scale mining is ever going to replace the elephants. But the reality is we're running out of options as well.
You've talked a couple times about this small scale ecosystem, right? So Novamera obviously is kind of unlocks a lot of value, right? It makes some of these things happen. What's missing from that ecosystem right now?
Well, I mean, I think for us, I mean, the investment piece, like that's one piece that we've been working with. We have a lot of investor partners that we're working with, right? So we've actually gone through the entire process from what you need. So if you're a junior miner, you have a high value asset, and you can't figure out what to do with it, what do you need to be able to actually bring this thing into production? And so we've now started to talk to investors, because there's huge advantages for small-scale mining for investors. They get a faster return, they're able to diversify, and instead of deploying one large amount of capital, which has a lot of risk associated with it, you can now diversify that with multiple projects. And I think that's the story that we're now trying to sell, so that you have all the pieces in place to be able to actually execute. So again, really building out a turnkey solution and a pathway that is easy to understand and easy to follow. Because again, I think we all know that things need to change, but the next question is, okay, but how? What do we do next? What's the next step? And so we need to build out all those pieces. And again, our focus has also been looking for these assets that are within proximity to a mill, but you've also got modular processing now. You've got all these new technologies that are unlocking new opportunities that we can continue to start to look at as highly profitable projects. And I think at the end of the day, you need to have these solutions, but they have to be profitable. They have to be economic. They have to be appealing, because this is going to take a lot of change within the industry, and so it has to make sense from an economic standpoint.
Any other comments?
Yeah, well, I think this idea of an ecosystem is really important, because what small-scale mining enables us to do, remember what I said this morning about horizontal scaling? If you can identify a large number of small projects that are very similar, and if you can build an industrial alliance of companies that together provide the means of production, and you can spread that alliance across that large portfolio and do things in very similar ways, very repeatable ways, that's going to have tremendous advantages. First of all, it's going to make design and replication very fast and very easy. Secondly, it's going to make social license much easier, because you just go to this mine and say, well, it's going to be just like this. Thirdly, you'll be able to unlock all of the imagination and creativity in those partners in the design of the whole system. But you're not going to do this by following the standard model of contracting out a feasibility study to an engineering company, unless you're willing to pay a huge amount of money for the billable hours. So I think that it's going to lead to a restructuring of what capabilities are in which commercial entities. And I think that the opportunity there for business model innovation is enormous and underappreciated, under-recognized.
That's right. It's the change in the business model that is the fundamental shift that's taking place here. And just to point out to you that you're actually involved directly in the same transition in the innovation space. Most of you have already realized how difficult it is to penetrate, to get any attention from any of the senior mining companies. They're almost completely impermeable. Your better chance is actually to find a mid-tier or a smaller scale mining company. That's exactly what this is. What this offers is a much larger number of potential people to adopt new ways of doing things, not just the actual technique for extraction, but everything that you are doing has a much better chance of adoption with smaller players than with larger players. And so that's the fundamental shift that's taking place here. And the fact is that most of the critical minerals that we're looking for, there are no 50-year deposits of spodumene lithium deposits. There just aren't. And that's even more true for all the others, including the rare earths. Just not a model that's going to work for this new demand. New technology is creating a demand for minerals that we've never extracted before in significant volumes. And now what we see is the industrial complex has to have those new minerals in large volumes, but not from half a dozen deposits. It's going to have to come from hundreds, if not thousands of deposits. And effectively, we're actually on the edge of a completely different business model that's going to develop.
I'm glad you went there, Douglas, because the next question was, Teresa, Novamera, this is kind of central to your business model is pursuing small scale mining. For the innovators in the room here that are developing solutions, what should they be thinking about when it comes to their business model, and how do they fit into a small scale modular mining operation?
Well, I mean, again, I was going to say, well, I think that, our approach has been looking at not Novamera was developed because there was a problem that we saw it was possible, and realized that this was actually a very common occurrence in terms of these, like particularly the periphery deposits. I think whenever you're an emerging technology and you're trying to launch new technologies into the market, you've always got to figure out where your path of least resistance is. Who has the most to lose versus who has the most to gain from new technologies? That's been my approach. I've been in emerging technologies for the past decade, and you have to think about the people that are stuck, so to speak, versus trying to move forward and try to fit a square peg in a round hole. And the reality is, small scale mining is going to take some time. It's going to take a lot of evidence, a lot of people profiting from it to be able to really start to move. And I also think, I talked about the ecosystem, but I also want to talk about, the reality is regulations, permitting. Everything that's been built around large-scale mining is also going to have to start to adjust. And that's a natural part of innovation and new technologies. And I'm sure all of you were probably facing the fact that you've created these incredible solutions, and yet there's a part of the process that doesn't fit with the new solution that you've built. And so it's about this idea of education and finding the early adopters that are going to be your heroes for your technology. Because I think the other thing that we found, at least, is once you can show that something works really well in the mining space and you can create those really solid business cases, it moves the dial very quickly as well, right? So there's certain industries where you can showcase what you're capable of doing, and you can really highlight that and push that out to the rest of the market. And I think that's the goal with any sort of emerging technologies. Find your stage, find your business case, find your ideal customer, and use that to be able to leverage it and tell the story. And again, I think to Andy's point, also figure out where your repeatable processes are. Right? So for surgical mining, our focus has been on, steeply dipping narrow vein deposits. We're not trying to cover every single possible deposit that exists out there. We're focusing on the ones that we know and that we've modeled are the absolute best fits for our technology. And those are the ones you start with, because I think one of the biggest killers of emerging technology is you try to be something for everybody. And you can't move, you can't support it. We're startups, we have limited resources, we have limited time. Focus in on the projects, the customers that are going to give you the best possible case studies.
Great, thank you. Andy, can I ask you a maybe more specific question?
Can I?
Yeah, absolutely.
I've got two things to say first. I've got to say them. So the first thing is to pick up on what Teresa said about who has the most to lose. I think if we looked at social license for open pit, we might find that there's a correlation with strip ratio. And the greater the strip ratio, the less likely it is to be accepted. Once a technology like surgical mining becomes widely known, that correlation is going to get recalibrated. It is going to be much harder to get permission to create an open pit if people know that there's an alternative that is surgical and just leaves pillars of concrete in the ground. So the rules of the game will change. When we talk about people who have things to lose, technology disrupts. It changes the rules of the game, and the social license for open pit is going to collapse, in my estimation. So that's the first thing. The second thing is ways in which everybody can contribute. Beware of the groupthink in the mining industry that says that the only thing that matters is efficiency, because that is what drives you to a steady state mentality, and that is what causes you to disregard small-scale mining. Small-scale mining, the valuation will rest on flexibility. It will rest on agility. It will rest on responsiveness, time to market. And I know that you are starved of tools to calculate the value of your innovations in mining applications. Like, this is a serious problem that innovators are operating in open loop in mining because the systems integration paradigm is broken. So you're not getting the feedback you need for how you create value. But just bear in mind that in small-scale mining, I think value creation will be through agility and flexibility rather than through some notion of steady-state efficiency. Okay, now you can ask me a
That's
question.
great. No, I was going to ask, how does business model, how these changes in business models is going to affect license to operate. So you kind of already answered that. But if you'd like to elaborate on it.
Yeah, well, just on that point, there's going to be some challenges because in this model that I outlined where you have an industrial alliance that's working across a large portfolio of projects, what is the opportunity for local employment in that model? It's not obvious to me. And one of the questions I floated a while back in a conference was, is it possible for a mine that has zero local employment to be an ethical source of supply? This is a really difficult question. Very few people are addressing this potential consequence of automation. And we might say that we're going to create higher value jobs with higher skills and so on. But in this model where we're spreading out across a large number of small projects in very diverse areas, it's not necessarily going to hold together. The only solution I can see to that is equity participation, is that you have the community own the project. And that was the basis on which we founded Inspire Resources 5 years ago, was to put forward a model that would be mining as a service to community-owned projects. We never managed to find an investor to buy into that. But I honestly think that we can't rely exclusively on labor participation as the source of social license in the future. It's going to have to be an equity participation part to it to make this work. And honestly, I think that's already happening. You think about the government's loan guarantee for indigenous participation. That's mostly focused, I think, on large-scale projects at the moment. But when it finds its way to the small-scale world, I think it will have a lot more impact.
I think you need to say that one more time about the workforce not being correlated to LTO.
Yeah, so forever we've relied on local employment as being the payoff for the impact that we create through mining. That's been the source of the trade-off. In a future in which mining is highly automated, I'm not entirely convinced that we will still be able to square that circle with local communities, particularly with small-scale mining, because the business model is going to have to be spread across a large number of projects. And I believe the only solution to that is either to have zero impact, which is very difficult, or to enable equity participation. And I don't just mean a free carry, I mean in a governance sense. So the local community is calling the shots and making the decisions about what gets done. I believe that's an inevitable direction of travel and that we should prepare for it, and that there is a role for innovation in making it possible to accommodate that.
Just to follow up on what you've just said, is I actually do think that zero impact mining is part of the future and will have to be part of the future. A large part of it will be taken account of by the circular economy, which is instead of just generating revenue from 1% gold or 2% copper or 3% nickel, you're actually going to generate revenue from 95% of the material that was produced by the operation. And those other commodities will be used for different other practices. The fact is that we're never going to have a model for the critical minerals, what we call critical minerals, because on the list of critical minerals is platinum, is copper, is nickel. But if you think about the highly specialized minerals, the metals, there's never going to be the kind of copper-nickel market, LME type distribution system. These are all going to be small-scale contracts between different players in the place. And the third factor, so it's not just small-scale mining and small-scale innovation, which is the way of the future, so it also then now impacts the investor community. Because just like you say, there's an isolated group of investors who consider mining, and the vast majority of the others will not. In exactly the same way as the critical mineral spaces can never be the same as the copper, nickel, or iron ore, there's also going to be created now a whole different suite of investors who will, on the one hand, invest in small projects, and on the other hand, invest in small innovations that become seriously important innovations in the near future. So I think these things are not individual changes. They're actually part of a system change that's happening, which I wouldn't have said if you hadn't been here this morning. But the fact is, it's a complete change in the whole dynamic of the industry.
I was just going to say, I mean, what happens when you start to reduce the risk? What happens when you start to reduce the impact? What happens when there's less of a trade-off that needs to happen, you know, when you're actually getting into production? These are all really interesting, I think, questions that are going to be really exciting to be able to see because, you know, I mean, from our perspective at Novamera, like we've been looking at, okay, well, you know, if we're basically kind of bridging the gap a little bit between exploration and production, because part of our process is that we're actually adding the level of definition from the actual ore body as we mine. That changes the game a lot when it comes to how, you know, technical reports and requirements have been built, because everything has been very separated. What happens when you start to create processes that, you know, that are de-risking the project as you go? What does that mean from a stakeholder perspective, from an investor perspective? When you're creating 95% less waste and you're not creating any water discharge and there's no dust and there's no blasting and there's none of these things, what does that look like when it comes to environmental impact and community impact and what it means for a community to allow a project to move forward? And I think these are all the exciting things that small-scale mining brings to the table. Is you're taking a lot of the very common flows or processes and lengthy things that have happened in conventional mining and you're just removing them entirely. And so that's going to be a very exciting thing to see happen in the next little while. Again, because we have no options. We have to figure out new ways of creating more production. There's no question. And part of all of us in the room are trying to figure out these new methods and disrupting how the industry thinks about it. And again, presenting really tangible solutions for how we get there.
That's, I think, a fantastic ending point. But I do want to open it up to the room if there are any questions for the panelists here about small-scale mining and what it represents as an opportunity for the industry. We got the microphone handy? Oh, okay, I can repeat it too.
So the business case makes complete sense, right? But you guys kind of touched on it. It's the regulatory framework. Like, you're not going to release an I-4311 for each of these little deposits. So how do you have these conversations with government? And there is precedence for this, right? Like, you know, Ghana, for example, has a legalized framework for small-scale mining. Have these conversations started, or is it still early days?
Can I take that?
Yeah.
Yes, absolutely. So we're actually starting, our first projects are in Newfoundland, which has a small-scale mining provision. There's actually a few provinces in Canada and many states in the US that have small-scale mining provisions, which allows you to extract a certain number of tonnage. It seems to be sort of the magic number, seems to be around 100,000 tons per year, without the same requirements that are necessary for larger extractions. So we're starting there. So to my point about where should you focus and, you know, from a technology perspective, focus on the areas where you can move forward and create those business cases. And so those are 100% conversations we need to have, because that's the barrier that's going to be presented to our customers, right? So the hard part about being a new emerging technology is you're going to have to do a lot of the legwork. You're going to have to create a lot of the paths. You're going to have to white glove a lot of these things all the way through and answer a lot of the questions as you go. And so that's how we've started. Canada has small-scale mining provisions. US has small-scale provisions. Peru, Chile, everyone is trying to get more production happening. And so we're finding there's more and more that are cropping up. They just haven't been very public. So it's required a little bit of digging and a lot of partners. So we also have really strong partners that are experts in permitting that are helping us compile and bring all these things together. So as we get projects coming through, we know exactly what the process is to be able to move them through the pipeline.
I think technology also has a role to play here. So if you imagine Novamera's mining method, let's say that you had a civil engineering project in which you wanted to plant a 100-meter tall column of concrete in the ground. I don't know, to make a stable base for a picnic table or something, or whatever. But if you had a civil engineering reason why you would want to do that, who would care what you did with what you took out? Like, you know, if you are regulating that in a different regime that is not designed around mining and all of the impacts that mining traditionally creates, it might move a whole lot faster. To your point on 43101. I'm a 43101 skeptic. I believe that the regulations, first of all, BRIEX was the best thing that ever happened to the engineering profession. But the regulations that protect investors are protecting an ever smaller base of retail investors that are becoming, frankly, irrelevant to the critical minerals challenge. We're seeing a much greater willingness of governments to participate and to intervene directly upstream in the value chain. You see the sort of investments the US Department of Defense is making. Are they depending on 43101 reports? Don't think so. Private equity, when they realize there's something that is actually not out to screw them, they'll probably start to invest as well. Do you need a 43101 in order to get private equity? No, only if you're publicly listed. And so I think if we imagine a world of business model innovation, we might say that 43101 is a set of practices, a canon of rules and regulations and guidelines that is actually stuck in a bygone era when there were a whole bunch of retail investors who needed to be protected in a highly technological field. So this might not be welcome news to you given the presentation, but I'm not sure that 43101 should be seen as a necessary fixed cost of the mining business in the future.
And also, like, what if you're not spending 60 or 80 million CapEx? What happens when you're only spending 4 or 5, right? Like, all of these things are changing the game and changing why a lot of these regulations were created to begin with, which was ultimately to protect investors. So what happens when you require far less capital, so there's far less risk, and you've added the technology and the capability to be able to de-risk the project as you go, right? I mean, the way conventional mining was done is you go in, you drill, you define it to a certain level, you go through the planning, you go through all these processes. But what happens if that whole process is much faster, much more data-driven, based on real information? What does that mean for what's required to make this a reasonable investment to protect that stakeholder? And so that's where I think this is going to be a really interesting shift in technology is changing the game in terms of what's actually required when it comes to protecting the stakeholders.
Any other questions from the audience? Janice?
Hi. Oh, hello there. Hello, everyone. Thank you very much for this great discussion here. My name's Janice Fingler. I'm with UBC Brim and we are the West Coast partner of the MICA network, so that's my role. But I also have had over 35 years in the junior exploration and development industry, so I've seen actually a lot of different risk tolerances. And I find that actually it's way more dynamical and a lot more nuanced than probably a lot of people might know unless you're actually embedded in it. And we're very good, one of the things we're very good at is actually recombining, just like innovation needs to do in a complex system. We can recombine and take all those parts and make a snowmobile and for whatever the need and whatever the enabling and governing constraints of the system are on us. So it's not only the companies that are doing that, but also the people, the workforce. Among the professionals, it's how we survive our informal networks. And one thing that, we do it informally. Some come together as little mini firms where you can have different experts. And within those, sometimes you're taking on dual roles. You're not just staying in your role identity as a geologist. You become a geologist and a communicator within your group, or you become, we expand and stretch beyond our capabilities to be able to survive. And and some people become that tea expert, as well within these groups. So there's that kind of innovation happening. And when you talked about alliance, Andy, that interested me a lot because I've heard talk about in the exploration side among the workforce is co-ops, for example, and that's one type of alliance. And where if, for example, one expert or even some of the engineering models take that on as well, but sometimes you stand down, or even research collaborations. Sometimes you contribute to ideas, but you're not the one going forward with the grant or the innovation or the solution. So you choose to stand down or even go backwards or pause in contributing to that effort until you're activated. Could that be possible in this model as well? And would a community-owned project be willing to stand down in alliance if those results aren't coming out of it? Like, can they be safe to fail experiments rather than fail safe? So what's your thoughts about that? I'd be curious.
Not only do I think it's possible, it becomes essential. Because once you begin to have more and more equity positions by local communities, that is, by definition, the protector of that community. One of the problems with the 43-101 and other regulatory practices is very little of it was directed towards protecting communities from the social and environmental impacts of those projects. And so they've actually now mobilized themselves to say, actually, we're going to have a say in this whether you like it or not, and oftentimes the answer is just going to be no. So that's already happening, and this is the other half of the coin. So this whole business that we're in is in a mishmash of evolution, and it's going to take some time to sort it out, but it's now unstoppable. Because of the demand for critical minerals and those very specialized materials, there's no escape from this now. It has to take off, because otherwise the industrial complex can't get those materials, and we somehow still stay frozen in the 2000s instead of moving on to something new.
I really love what you said about getting people involved in things, because one of the things I worry about most in the junior sector is the resource allocation problem. In a world where we believe that there should be 1,000 exploration targets for every mine, which is questionable, but if in a world where we believe that's normal, how are we choosing where the drill rigs go and where the people go? What I worry about at the moment is the purpose of the junior sector appears to have become the creation of tax breaks for high net worth individuals. And what I worry about is that a lot of the expenses of exploration are in a tax break generation industry rather than a raw materials industry. I think that the mobility of those people, I mean, we've assembled focus groups of people who work in exploration services, and we've explored how they feel about being in that business. And it's a challenge for a lot of them. And it's one of the reasons why the industry is struggling to recruit people, is that they're facilitating tax breaks instead of actually searching for the raw materials that people need. So I think there's a huge amount that can be done to reconfigure that capability base and have it work on the most likely projects to succeed instead of the ones that give the tax breaks to the people who need them. If I could be brutally honest about it.
Thank you to our panelists for a wonderful discussion, obviously of high interest to us at MICA. You can see, and SEMI, you can see why we're very interested in pursuing small-scale mining as a model for a lot of these innovations. So thank you.